It's an urgent warning. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, two top banking insiders are warning that in just 4 days, all hell will start to break loose. And I'm going to show you what they're concerned about, what they say you need to do right now, and why in a matter of weeks, they believe all chaos is going to break loose. In our show that makes you money, it's our Sunday show. We like to look at the technicals, momentum, and machine positioning to help you be a better trader and investor. We're going to put these banking insiders to the test and give you our opinion and tell you what we think you should do. And speaking of making more money, we'd like to welcome XTI Aerospace to the show. They're on the Nasdaq under the symbol XTIA. They are the future of air travel, and I'm going to show you how an investment in XTI and one press release could potentially net you a 40% return. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now let's head over to Bloomberg, where we picked today's story up with the headline as Goldman's hedge fund's head says it's time to cut portfolio risk because the possibility of a drawdown is rising, and this is something that investors just aren't focused on right now. They believe stocks at all-time highs can go higher, and they want to keep buying at this level. But what happens Thursday night just isn't the July 4th holiday. It's also the opening of the futures market, and there'll be no window to really trade before the non-farm payroll report hits, and these are starting to become the catalyst of what Goldman is saying is going to be a big decline in the equity market. It's a bull market, but the probability of a drawdown is rising. This from the bank's global head of hedge fund coverage, who wrote in a note to his clients on Friday. So I've looked for places to reduce overall portfolio risk as we navigate the next phase of the political game, as suggesting that the upcoming election is going to wreak havoc in the markets and in a meaningful way. The market still gets the fundamental support from easing financial conditions and U.S. mega tech stocks. As long as the economy is growing and earnings are growing, significant sellouts are very rare, but that could change. Something that I've been concerned about is this could be the last quarter of good earnings, and it may not even be that because we're already seeing some companies start to report, and it's absolutely devastating. Their stock is getting slammed lower, but for the mega techs, this may be the last good quarter. And despite the strength and momentum, he sees few growing risks to the bullish narrative. They include a widening fiscal deficit, a buildup of stock exposure among households and institutional investors, as well as narrow breadth, indicating that everybody owns the same 5 stocks. The history book tells us the risk of self increases as the rally narrows, and that means fewer stocks driving the market higher. And this is indeed a risk because once everyone's all in, the market tends to go the other direction. He also told investors that they could take advantage of low-cost downside protection and hedge portfolios with put options, as well as so-called look-back put options that allow the holder to exercise a derivative at the most beneficial price of the underlying asset. And if you don't want to do that, he also suggests maintain your highest quality exposure and start trimming out of some of your other positions, and something we think could be a huge benefit to your portfolio and lead to a 40% return. On the note of a press release, that is a stock of our sponsor today's show, XTI Aerospace. Again, you can find them on the Nasdaq under the symbol XTIA, and here's some of their competitors. And just on a press release, we've seen on average the stock of companies in this space jump 40%, and since they're trading as of close of business on Friday at around 44 cents, this is an impressive opportunity for you to get in very low. I'll show you a great chart setup. This is a buy and hold until the right news hits, and then it's all upside for you. But Goldman's Rubner sees a market correction ahead of an unloved rally as well, but his call is coming more in the middle of July. The Global Markets Division Managing Director and Tactical Specialist has been correctly bullish on U.S. stocks in May and June, but after the 17th of July, he's modeling a correction of the market. This usually means about a 10% drop for equities, and he's saying, I would be looking to trim exposure up here post July 4th. This in a very timely note to the clients. So again, you see coming out of the July 4th holiday, we're going to have the non-farm payroll report, and if this is a miss, it may be briefly bullish, but not for long as equity investors start start to find out that maybe the U.S. economy is already too late in a spiral into a recession, that even a couple of Fed rate cuts won't save it. And August is a historically weak month for U.S. stocks to begin with, as liquidity draws down ahead of the back-to-school quiet period. But this time around, a move lower could be exacerbated by the U.S. election, as Rubner predicts a pre-election correction where institutional investors will be forced to sell their winning long positions and hedge into the event, and suggesting again you do the same thing. But after the election's over, well, he suggests his models an anti-momentum unloved rally and expects the other 495 names in the S&P 500, if you can imagine that, will overtake this year's top 5 performers such as Nvidia. And instead, value small cap stocks could beat the big tech winners. But the question is the market likely to come down this next month? Are they right? Well, the answer is, according to the charts, it does seem highly possible. Let's take a look at our screens where we look at, again, the technicals, momentum, and machine positioning. Here we see the S&P 500, symbol SPY, the largest traded ETF, and momentum is positive here. You'll note the relative strength indicator. It's at 63 and cooling off. The MACD, or moving average convergence divergence, that's got a negative cross. And our own Momentum Timer Pro, which takes a look at a number of these technical signals, averages them out, and we run a proprietary signal in there to smooth it out. Look at what this is. You see our daily count, 39 consecutive trades on the upside here. Max on the 1 month window, max on the 3 month window, max on the 6 month window. And what we tell our subscribers is they're maxed out to the extreme. And at some point this reverses. And all this means is if you're trading the S&P, it's time to keep raising those stop loss levels, because at some point this is going to reverse in a meaningful way. And for our CTA Timer Pro, we mimic the machine positioning. We note, according to Goldman, they're at max long. There are some tiny buying coming into this week, but look at our position on our fast algorithm and slow algorithm. It is max long, and you can get a 30-day free trial to both of our reports. Link in the description below. We're now beginning to put AI technology into CTA Timer Pro. You got to jump on it before we release that, because when we do, it's going to be even better, and the price is going up. And while you're there, check out XTI Aerospace on the symbol Nasdaq XTIA. And right now we got stopped out of this position, and we're okay with that. Friday's closing really went nowhere. Let's take a look at the charts, because it does look like the market is starting to peak here, and when that happens, it's setting up for a much larger move down. And of course, 10%, as Goldman's suggesting, that would take 50 points off the index and bring it down to this level. Well, it may be able to go even lower. Let's zoom into the 10-day window, and you'll notice we have this volume profile turned on. You see this red line. This is where the most shares have been traded over the last 10 days. That's at 544. And you can see the market's just holding right above that, but a breakdown there would send them down even lower. And let's zoom out to the 30-day window. You see real support. The next level is at 529. Goldman says, well, it's going to break through that potentially. And if we look at the next level, there's your 10% correction at 514, your next level support. If it doesn't hold that, watch out below, but you have a potential double top standing here on the S&P 500. It's a small one, but given what we're seeing here, heading into a period of low liquidity and political uncertainty, well, it's time to heed what Goldman is suggesting. Keep the winners, move out of the losers, and look to hedge your portfolio. And we see the same thing with the tech stocks, because remember, they're in blackout right now. They can't buy their stock back. And if we start to see their revenues come down, that means they're going to put less money into buying their stocks. And even if they continue, keep in mind, the higher their stock price goes, the less they get for their money. And this means, of course, they don't have as big of a push. And we know momentum is positive as well. RSI is at 63. MACD's got a negative cross. It looks just like the S&P. 39 consecutive daily buy signals on our Momentum Timer Pro, nearly maxed out across all different signal length, and our CTA Timer Pro, as expected, maxed out to the long side. And what this suggests, again, everybody's long the U.S. equity market. It's not just U.S. investors, institutional investors, foreign investors, machines, 401ks, pension funds. Everybody's long the two major indices, and that means they're all crammed into 5 stocks. Friday's closing went nowhere over the last week. We're leaving the upside target as an uncertainty because, well, when you get to the top, it's hard to know where you're going from there. But let's take a look at the 6-month window here, and you can see the 6-month support's way down here at 439. Potential double top here. The question is, what will the payroll report be? Will it be bullish or bearish? But looking at the 10-day window, what do you see? It broke that volume profile, suggesting the market is now going to move to the downside. As we zoom out to the 30-day window, it's way down here at 453. A 10% correction would take 80 points off this, down to 400. If you can imagine, well, that would mean we're looking at a move below the 200-day moving average, and at that point, you don't have support until you're all the way down here at 386. That would wipe out all of the rally since November of last year. And that means, of course, investors would not be bragging about the equity market at this point going forward. But is there a case that indeed Goldman is right here? Well, for that, we need to take a look at small caps. We've got the Russell 2000 pulled up. Momentum is positive on that. We now have 2 consecutive daily buy signals. It doesn't show it here, but this was a trade put on for our subscribers. If you want to know what that trade is, you've got to be a subscriber. There's links in the description below. We give you all the detail, stop loss levels, my logic of why I think there's a trade, what I think is the upside potential. Here you see the RSI is at 52. The MACD is pulling a positive cross. And really what the market needs to see here is small caps start to rally. Upside target has been revised higher after we hit that to 206.54. Downside target unchanged. But look at the machines. They're fairly low positioning here, so they could actually buy more of the Russell from a momentum point. Over the last month, you were at a maximum sell signal. Now it's starting to turn around, which is why we flagged this to our subscribers. But let's take a look here at IWM. And what do we see? Let's overlay the S&P 500 to really give you a picture of what's going on here and what you can see. And we'll zoom out just so it's a little bit clearer. You'll see this purple line here. This is the S&P. This is a Russell 2000. Where one goes, the other follows. And in this case, if the Russell 2000 fails to rally here and rolls over, well, it suggests the S&P 500 is indeed going to fall, because where the soldiers go, the generals follow. And what do we see? And we zoom in here to the 6-month window. It's sitting right at that volume profile line. Sellers came in a meaningful way. Can the buyers break out here and give the broad equity market one last boost higher? It's possible, but this indeed is a short-term trade. Why we've told our subscribers to keep their stop losses tight. But let's take a look at the energy sector, because we see the same effect there. If there isn't demand for energy, well, it means the economy is indeed cooling off. Momentum has turned positive here over the last 6 days, but this wasn't enough to trigger a signal to our subscribers. We see the relative strength index, that's at 52. Positive cross on the MACD. Upside targets at 93, almost 94. Downside target way below at 83.88. Machines here on the fast algorithm are buying in, but the question remains for how long, because I want you to look at this chart here and see what I see. It's just a stair step down. You see price comes down, then buyers step in, sellers drive it down, buyers step in, sellers drive it down, buyers come in, and they just get slammed each and every way, suggesting to me that perhaps there's a little more upside here before sellers drive energy stocks down. Here you can see our downside target at 83.88, way down there below. Of course, that means there is a potential big sell-off in the energy sector. And again, you see the difference here. The S&P 500 rallying against a decline in energy. Well, that means the S&P isn't going to continue that direction if energy stocks sell off. Because again, an economy needs energy to grow, and without it, well, it suggests that the broad equity market is indeed going the wrong direction. Let's talk about something else else that's going the wrong direction that would really be a boost for stocks, and that is bonds. The market needs to see interest rates come down to give them any hope to drive stocks higher. And on Friday, interest rates were slammed higher, particularly on the long bond. Now is the relative strength index down to 46, MACD negative cross, one consecutive daily sell signal. Now we encourage all our subscribers to trade with stop losses, but here you'll see this one we didn't. We've been dollar cost averaging back with our signals. We're currently down 2.68% on this. Upside targets been revised lower. Downside target, we smashed into that and broke that. We're moving that down to the 50-day moving average. Our screens still show the machines long, which is a warning. They could be big sellers here in the near term if something doesn't turn around in a meaningful way for the bond market. Let's take a look at TLT, and here we can see, looking at the 6-month window, what do you see? The volume profile here. Buyers tried to break out and sellers continued to sell into these price rallies, and finally on Friday they won. The sellers just drove this down in a big way. You could see some buyers stepping in here. If you look at support now, we'll zoom in to the last 90 days, and what do you see? There's definitely support right down here around 91.10, and there's a little bit of support at the current price. So we'll see if buyers step in on Monday. But then again, keep in mind the Nasdaq needs to see interest rates go down to support higher equity prices, or at least that's the broad belief. So we're looking to see that as well. But for the moment, this pullback in bond price is not constructive for a bigger rally in equities. Let's talk about gold, because back on June 21st, our momentum time approach signaled a buy in gold. We gave our subscribers our logic why. We gave them an upside target, stop loss levels, everything they needed to know. And then here we see gold momentum negative now after 6 consecutive daily sell signals. Now that trade is down 1.29%. We've revised our stop loss level up for our subscribers, because remember, it's important that even if you see the market go the wrong direction, that you control your risk. You want to buy into the winners, control your risk on the ones that don't play out, because not every signal is going to be a winner here. But is there a chance that gold turns around and breaks out? Well, possibly. If the payroll report is a disappointment, investors may run to gold and drive it back up. We'll show you this chart. Let's take a look, because it does suggest there is a possibility here. As we know, the buyers are aggressively coming in here over the last couple of weeks. Every dip they're buying, the problem is they're running into the 6-month volume profile, and sellers have been waiting there each time to bring the price back down. Let's zoom in to the 30-day window, and what do you see? Buyers and sellers fairly evenly matched here. So it's going to take some sort of news or some sort of push by the buyers to drive this higher. We look at the 10-day window, you can see it's trying to break through, and if it does, it's setting up a potential move upwards of 219. Our target, of course, as you just saw, is 222, which we think is entirely possible still. And if gold takes off, well, that means that you're going to see the miners go as well. Here's our note to our subscribers on our CTA Timer Pro report on June 24th. We gave them all the details they needed on this trade, our logic behind it, the upside target at 36.17, and the stop loss levels. And here you can see we have a buy it open that is down 1.39%. But if gold takes off, this is likely to move, and that trade has now been followed by 15 consecutive daily sell signals. But here's the best part: price has not moved down meaningful, and that is actually a good sign to suggest that perhaps indeed there is going to be another move higher in gold. Because as we look at the miners, here we are on the 30-day window, every dip is getting bought, suggesting indeed this can go higher here. Let's take a look at our upside target again, 36.17. Let's go back to the chart and zoom out even further here to the 90-day window, and you can see buyers and sellers here. They are right at each other's throat, and if they break out, you can see the miners can easily get up here to this 36 level in a very quick way. All it's going to take is some little catalyst or little news, and there you go. So we like those two trades, but one you should stay away from, but we think is going to be a huge opportunity. Something I like to talk about on the show, because everyone focuses right now at buying things at highs and going higher. How about finding things that have been low and down a bunch and waiting for a reversal? That's what our reports help you do. Because soybeans, look at this, machine positioning, max short positions. This is what we want to see. How about on the technical side? Momentum time broke 22 consecutive daily sell signals, a max sell in the 1 month window, and this is continuing because you're in oversold territory right now. Let's take a look at this chart. It is really a setup that we like to see. It's dropping down. It hasn't reversed yet, but this is our focus. Look at what's going down. If this thing breaks down to the supply zone down here in the 21 range, this is going to be a tremendous opportunity for our subscribers, and you too could take advantage of that. And something that we think you can take huge advantage of, that is the stock for our sponsor for today's show, XTI Aerospace. Again, under the symbol on the Nasdaq, XTIA. And again, an investment in XTI and one press release could turn your account up by 40%. Let's take a look at the future of air travel, because this is the type of plane they are looking to produce. They've got a closed transformational merger that came back in March of this year. This is now listed on the symbol XTIA, and they're developing a new category of vertical lift crossover airplane, and they have right now 700 conditional pre-orders totaling $7 billion in gross revenues. This is why a positive press release sends these stocks higher. Let's take a look, because a missing link in air travel is solved by XCI. It gives them range, 700 miles in pressurized comforts, saves time, twice the speed of most conventional helicopters, and here's the best part, uses existing infrastructure, so you don't need anything new. And look at the TriFan expected time, cost, and emission reductions. Here you can see the XCI TriFan has lower direct operating costs, goes faster, and is going to save money, give, of course, those who own them more revenue potential, and they're led by a very experienced team, and that's how you know that this company is going to do great things. And at its current price of 44 cents a share, we're showing you some big upside potential, because looking at some of their competitors, when they put out a press release, you can see that there are times their stock jumps on average 40%. This is something to look at, to buy and hold, wait for the right news, and then you're going to see your account go up a bunch. And here you can see the setup recently is conducive of an investment in XTI. As we look at the 10-day window here, you see the price came down into the supply zone. What happened right here around, say, 41 cents a share and downwards up of 37 cents a share is buyers stepped in each interval. And right now it's sitting at 44 cents. Right here, this purple line is sitting on the 10-day volume profile, meaning the buyers are starting a move higher here. As we zoom out to the 6-month window, you can see the 6-month is right here. That is slightly higher than a 40% return, which is why we believe that a press release and an investment in XCI could send this stock jumping right into that 6-month volume profile line. And you can see they're oversold on the RSI, and the MACD's got a positive cross coming out of oversold territory, setting up a huge potential investment for you in XTI. But as always, with any company we feature on our show, you're under no obligation to purchase their stock. Be sure to do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.